All right, so welcome back. We're going to be finishing up the adjustments today. So, right here, where we last left off, was going to be um, replenishing the petty cash drawer. So, if you guys remember on the 23rd, right, we had a few purchases or a few things to get ready for the party, for the grand opening party. So here are the list of people that purchase things. Okay. So, and they used the petty cash drawer. So the owner used the petty cash drawer to buy pizza and some sodas and etc., which came out to a total of $187.16. While Irene, she bought the party cake. So here it is for $23.80. And Albert bought basically party decorations, streamers, balloons, plates, napkins, and etc. etc. for $71.82. So let's go ahead and how do I replenish a petty cash drawer? How do I replenish petty cash?
Do we debit petty cash and credit checking?
If you're going to debit petty cash, you are essentially trying to increase the petty cash. And yes, our goal is not to increase it, it's to replenish it. Because right now, the lockbox has cash and it has receipts in it. Okay, we already took the time to establish it. We used it. Now we need to replenish it. Does anybody remember? It is chapter 9.
Do we take money from the checking account?
We are taking money from the checking account. That yes.
And take the amount from the checking account and put it into the petty cash to bring it back to the total it should be?
Correct. Now, seems most what account seems most I guess most appropriate for this? We bought party supplies for a grand opening event.
Isn't it the cash register is the same as with the petty cash?
Yes. When we journalize it, yes, but in this case, we're trying to replenish it.
So the total is 282.72 that we spent out of the petty cash fund, and the petty cash fund was $500.
Okay, good.
500 minus the 282.72. So, 500 minus 282.78. So we need to put back in 217.22.
Okay, no, that's how much cash we have left in the box.
The 217.22.
The 272, yes. That's how much we have left in the box.
So we have left 217.22.
That's how much cash we have left in the box, yes.
Okay, so we need to put back in 282.78.
Okay.
So will we take that money out of the checking account?
That's correct.
Or,
I would
okay,
say cash. I would put cash on it, right?
Mm, in this case, no.
Okay.
How do we replenish a petty cash fund? Like,
we're going,
go ahead.
I'm sorry.
How do you
So
replenish? Go ahead.
do we debit the checking account and credit the petty cash fund?
That's to decrease the petty cash fund.
So we credit the checking account and debit the petty cash fund.
No, that's to increase a petty cash fund.
That's what we want to do, right? Increase it to bring it back to the $500.
We are not wanting to we're not wanting to increase it at all.
We don't want to increase the petty cash fund.
Well, right now it's at 500.
So if it's the total in the petty cash fund was $500, right?
Correct? And now we spent money, so now there's only 280, there's only 217 left. And 287 worth of receipts.
282.78.
Yes.
I'm sorry, I don't understand the way you're phrasing the question. I'm thinking that what we're trying to do is replenish the money that we spend on the party supplies, but I don't understand. I know you want us to figure out what other account to use, but I don't understand the way you're explaining it on how to get there.
Okay. Well, okay, so if you guys remember from chapter 9, in order to establish a petty cash fund, right, we would debit your petty cash and then you would credit your checking, right? In order to increase the money flow or the amount of money that's in there, you would debit the petty cash fund. But then if you want to decrease it, you would credit the petty cash fund. In this case, I don't want to increase or decrease the petty cash fund. I'm just trying to put the money back into the account.
Okay. You put the receipt.
That's increasing it.
Okay. Okay, Nathan, the receipts. What about the receipts?
You just total the receipts and
You totaled the receipts.
then debit the receipts. So
You debit the receipts. Now, in this
and then
case,
you put back the money or replace it with checking with the cash amount.
correct. Now, in this case, right, I'm looking at all of these receipts. Which account, okay, I'll give you a hint here. It's going to be an expense account. Which account is going to be the most appropriate to recognize these expenses? Is this advertising expense? No. Is this a bank fee? No. Is it a business expense? That seems about the closest
Yes.
one, right?
That seems- yeah.
It's not freight expense, it's not labor expense, it's not payroll expense, it's not a utilities expense. So out of all the items that you have there, that is correct. You're going to calculate the total amount of receipts and you're going to debit those receipts to put the money back into the petty cash drawer. So in this case, we're going to be debiting business expense. Okay, because this was a business expense, right? We bought things for the business. We had a grand opening celebration, which was for the business. And out of all the expenses that are listed out there, the business expense is the one that makes the most sense. So in this case, yes, that is correct. You're going to recognize that these expenses has occurred, okay? And when you recognize those expenses, right, then you're going to credit your checking because you're trying to put the money back into the petty cash drawer by debiting these expenses. Okay, so that should be 6,200. For the total of $282.78. So in this case, right, when we made these expenses, right, we didn't record them. They were just hanging in the air. Okay? Now that we are going to recognize these receipts, right, we're going to total them up And what we do is going to recognize those receipts and then just write a check out for the total amount of receipts. So in this case, the total amount of receipts was $282.78. And now that we recognized it, all this money, so basically we are taking those receipts and we're trading them in for cash. Okay? And that is exactly correct. Right. If we debit petty cash or credit petty cash directly, we're essentially trying to pull money out of the petty cash drawer and never putting it back in. Okay? In this concept, it's kind of hard to understand, but in this concept, right, you shouldn't directly use petty cash drawer because you're trying to keep a flat amount in that petty cash drawer at all times. You don't want to fluctuate it at all times. You don't want to increase it all the time or decrease it all the time. You want it to stand at one solid number for a while. So this is how we journalize this replenishment of the petty cash drawer, is that now that we're putting money back into the cash drawer, we have to recognize the expenses that we made. All right, in your notes, well, we have to write a check to the petty cash drawer for $282.78. Once again, just go ahead and just write petty cash for now, because we didn't assign anybody to take care of it, so petty cash is fine. So we got check number 1533. So, note here to
So in this sense, we don't debit or credit the petty cash, right?
no, we never do, because we want to keep that number same. In this case, we didn't recognize these expenses when it occurred. So now that we're replenishing it, we have to recognize those expenses. Yeah. So that's the idea here. We're recognizing the expenses now by trading in or cashing out those receipts. So we go to operating expenses first. We're going to put this under business expenses. Here we are. You could say replenish for grand opening party supplies. General journal. This is, I believe we were on 22. Okay. We increased it by $282.78. So therefore, my grand total amount should be $1282.78. Okay. Is everyone good with me so far?
Yeah.
Okay.
Yes.
Okay, so now we have to change our checking because we had to put money back into the petty cash. Replenish petty cash. General journal 22. And we subtracted 282.78. So what's my grand total in my ending balance? Or what's my grand total in my checking account?
The third, the 13,142.60
Correct.
by adding the 1342 and subtracting the 282.78.
Good. Okay. So here, it's an internal transaction, so it dealt with nobody. So we are done here. Okay. So then let's see what is next. Okay. Estimated the allowance for doubtful accounts, okay, is going to be based on 5% of accounts receivable balance. Okay. So the estimated the company estimates that the allowance for doubtful accounts is going to be subject to 5% of accounts receivable. So what do I do here if this is a allowance, an estimated allowance for doubtful accounts?
So you go to your accounts receivable and figure out the 5%.
Okay, so let's take a look at our ledger to figure out what our total amount of accounts receivable is. So let's see. Okay, accounts receivable, our total ending right now is $1,531.95. And we're just claiming that 5% of them is going to be uncollectible. So, how do we journalize this? If 5% of 1531.95 is to be uncollectible.
Are we
So,
going to debit? Oh, sorry. Go ahead.
no, go ahead, ask your question.
No, go ahead.
Oh, I just figured the amount. It's 7660.
Okay.
Go ahead, Sonia.
I was just going to ask, are we going to debit allowance for doubtful accounts and then credit accounts receivable?
Okay, so in this case, we don't know who faulted on their payment, right? Because this is an estimated amount. This is saying we don't know who one day is going to make who's going to fault on their payment. So this is an estimated amount that's saying that, you know, maybe Katie will fault on me one day, or maybe Coffee Corner will fault on me. In this case, I don't know who, so I can't directly take off the allowance if I don't know who.
Then I don't know.
So would it be a bad debt expense and allowance for doubtful?
Good. This because we don't know the specific amount of how much each person is going to fall on us. We're going to make a generalized assumption and just write off bad debt expense. Good. So if you guys remember chapter 10.1, when you don't know who and you don't know when these people will fall on you, the company is going to make an estimated rough amount of possibilities. Because right now, if 5% is for the whole year or whatever it is, 5%, which is going to be prorated. So that means at any given time, 5% of those sales will be uncollectible, whether you write it off or not. Now, if you end up getting that money, that's completely fine. But at the end of the day, you are still assuming that because you're letting people allow you to owe you on an account, you have to realize that there is that 5% possibility that they could fall on you, because we don't know what their given situation is. So in this case, we're just going to write that 5% off because the government allows us to take that 5% off anyways. So they let us take it off as a loss, okay? And they let us continue on doing business. So in this case, bad debt expense is what we're going to use. And we're going to be crediting the allowance for doubtful accounts. Okay? And then what are those account numbers? The bad debt expense is 65,000, and then the allowance for doubtful accounts is 11,100. For 7660, right, Erica?
Yeah, that sound is correct.
Okay. So for your note here, what do you want to say?
How about to write off 5% debt of AR?
Mm-hmm. Perfect. Okay, AR is also known as accounts receivable for short. Good. Okay, as we know, accounts receivable, allowance for doubtful accounts is a contra account to accounts receivable. In this case, since we don't know who particularly, you don't need to take it directly off of the allowance. The accounts receivable. Okay. So let's go ahead and fill in our numbers here. Okay. Ledger. Let me see. Bad debt expense is an operating expense. $22 for 7660. Okay. For 7660. Okay. And then we're going to go to our assets because we need to adjust our account for the allowance for doubtful accounts, right? Contra account right here. 5% of accounts receivable. General Journal 22, and this time we're going to credit the account for 6760. So we are done with this journal here. All right. So that means we're going to be moving on to journal number 23. Okay. And let's see what else has happened. Okay. So now that we estimated the allowance or doubtful accounts, now it says we're going to start to calculate 1 month of depreciation for the truck. Okay. Its mileage, okay, is 150,000 before it needs to be maintenance. Okay, no salvage value, and useful life is 7 years. Okay, and then it says right here that this month we drove a total of 1,200 miles. Okay. So this is where we're going to be taking our depreciation tables out. Okay. So let's grab our depreciation tables. Okay, here we are. Okay, we are going to be looking at the truck. So I'm going to find the tab that says truck. I think it's the last one. Here you go. Truck. Okay. So let's take a look at what are the things that we need to have in order to figure out how to solve for our depreciation. So we obviously know, actually, wait, do we know what the depreciation method we're going to be using?
Yes.
What is it?
Units of production.
We are using units of production. All right. Okay, we know that there's no salvage value. Okay, and we know that the useful life is 7 years. Okay, the mileage, it can go up to 150,000 miles, right? So now we have to figure 2 things out. Number 1 is going to be the asset cost, and then number 2 is going to be the date that we placed into service. Now, where can we find these values?
In the ledger?
In the general ledger. Good. So let's go ahead and go into our ledger real quick and find that truck. Okay. So again, depreciation is going to be based on all fixed assets. So let's see. Vehicles, truck. Okay, so here we have a truck that's worth $32,208.90. Now, when did we buy this truck?
June 8th?
June 8th. So what was the assumption when we bought the truck and we drove it off the parking lot?
Can you repeat that?
What's the assumption when you buy the car and drive it off the parking lot?
It decreases in value?
It depreciates, yes. So in this case, the day that you bought the truck is the day that you started depreciating. So this was as of June 8th. Okay? And it was for $32,208.90. Okay? So in this case, right, we have all the information that we need to in order to solve for this depreciation. Okay? So, if you guys remember, this is units of production. What is going, and we drove how many miles for the month of June?
150,000
That's the capacity. What was the amount that we drove for the month?
for the month of June. How much did we? How many miles did we drive for the month of June?
Uh-huh.
Hmm. Um.
1200.
1,200.
Oh, okay.
Yeah. So we drove 1,200 miles.
Okay.
Okay. So it says right here in the scenario, in the month of June, this month we drove a total of 1,200 miles. Okay. So let's start here. What's the depreciation basis?
The 32,208.90.
Okay. So how did you? What's the formula for that?
Um. Depreciation less the salvage value.
Okay. So asset cost minus the salvage value. Good. Gives you
So
32,208.90. Good. What's the depreciation rate?
I got the 32,208.90
Uh-huh.
divided by the 150,000 miles
Good.
came to 0.214726.
Good. That means it's going to cost me 21.47 cents for every mile that I drive. So in this case, what's my depreciation expense going to be?
257.67, and I got that by multiplying the per unit rate by the mile.
Okay. 257.67 cents. Good. Right? AQ is going to be the same. And then book value.
I minus the 257.67 from the 32,208.90,
Good.
which gave
Excellent. Good.
31,51.23.
Perfect. Good. And there you have it. That's my very first depreciation. Now, what I'm going to have you guys do here is that since they're all going to go to the depreciation expense account anyway, just go ahead and complete all the depreciations. And then when we journalize it, we'll journalize them as one whole entire lump sum. Okay? So let's go. So that was the depreciation for the truck. Good. So let's see what happened next. Okay. Now it says calculate 1 month depreciation for both coffee brewers. Okay. The first coffee brewer, okay, has a life remaining of 3 years, okay, with no salvage value, while the second brewer has a useful life of 5 years, no salvage value. Use straight line. Okay. So here we're going to go to our depreciation tables and we're going to locate our brewers. Okay, here they are. You got table for one, coffee brewer number 1, and the table for coffee brewer number 2. We know what the depreciation method is, right? We're using straight line, so put SL for short. Okay. We know that the salvage value is 0 for both of them. Okay. Now, the estimated useful life, they said that the first one only has 3 years left, and the second one has 5 years. Okay? So now we need to determine when we bought it and how much it was worth. So, where do we find that? Okay. So, when did we buy the very first coffee brewer?
June 4th.
June 4th. Okay. Now, the assumption is when you buy it, you're going to turn it on and test to see if it works because you bought something from someone else. So that's the very first thing that you're going to do. So in this case, you will already placed it into service. So June 4th. Okay. How much was that coffee brewer when you originally purchased it for the first coffee brewer?
1,900.
It was 1,900. Good. So then what about the second coffee brewer? How much is that one now?
That one is 40. Hold on. 260509.
2605. Wait, 260509?
Yes.
Okay, I got 29 cents. 26.
Oh, maybe I have a typo then. Let's see.
26.
Oh, 450529 here.
Okay, so 260529. 260529. Right? And then when did we place it into service?
Was it June 4th?
It wasn't June 4th because that was the first coffee brewer.
We're on number 1, right?
We're on the second
We're on
one.
up 2.
We are on the coffee brewer number 2.
Oh, okay.
June 10.
We bought it on June 10th, which the assumption is we had to turn it on to test that that machine worked, right? That's your number one rule when it comes of buying electronics, right? You need to plug into the wall to make sure it works. So in this case, we've already turned it on June 10. Okay? We didn't necessarily place into service, but we definitely need to make sure that the coffee brewer works. We did some test runs, so obviously to get it ready for service, you need to make sure you have those things done. So let's go ahead and do the first one first, okay? So here we have all the information that we need in order to be able to solve the depreciation. So in this case, we're doing it for the month of June. Okay. What's my depreciation basis?
Straight line?
Okay, not the method, the basis. How do you solve for the depreciation basis?
The 1,900?
1,900?
Yeah, divide that by the salvage value, which is 0. So
Okay.
it still stays at 1,900.
Okay, good. All right, what's my depreciation rate?
I got 0.33333333.
Okay, so how did you figure that number out?
I
Divide 1.
divided the estimate useful life by 1.
Good, perfect. 1 divided by 3 gives you 0.333333. 1/3 of its life, okay? Good. What's my depreciation expense going to be?
$52.78.
52.78. So, if we did 1/3 of 1,900, that is for the whole year. Here, Erica recognized that we're only doing it for the month. So we had to divide the whole thing by 12 to give us what 1 month of depreciation is. So in this case, 52.78 is correct. All right.
I got I got 633.33.
Yeah, because that's for the year, not for the month. And we're only depreciating for the month.
Okay. And
Yes.
so that would be
So you have to,
divided by 12
yes, because we're
a
only looking
year.
for 1 month. Yes.
Okay.
And I want to thank Nathan for this because every time we do this, I remember him always bringing up that we needed to divide by 12. Thank you, Nathan.
All right. All right. So 1900 minus the depreciation expense. In this case, you don't really need to have the book value portion done. I only have it there for practice purposes only, just because we're only dealing with depreciation for this 1 month. So we're not going to look at it again. Okay. So there we have it, 1817. Okay, so that was just for just only coffee brewer number 1. So now we must solve for coffee brewer number 2. Okay, for the month of June and the month of June only. Okay. In this case, right, depreciation basis is going to be
Straight basis, depreciation basis. That one I don't have. 15. 15. So the salvage value minus the life,
no.
D6, salvage value minus the access cost, sorry.
Okay, so it's going to be asset cost minus salvage value.
So it'll be 2605.29.
That's correct. Good. What is the depreciation basis going to be this time?
1 divided by 5.
1 divided by 5, which gives you 0.2. Okay. So my depreciation expense for the month of June is going to be
I got 43.42.
43.42. Good. Okay. With a book value of 2561.87. So for the coffee brewers, what we're going to do is we're going to combine the two. You can put it on the off worksheet or somewhere that you're able to find it. In this case, I'm just going to do it randomly here. So whatever 5278 is plus my 4342, it's going to give me a grand total of 9620 for my depreciation basis. For my depreciation expense for the month of June for both coffee brewers. Okay. Everyone good so far?
Yep.
Yes.
Okay.
Yes.
So then let's go ahead and take a look at the next one. So it says right here, calculate 1 month depreciation for the coffee grinder. 5 years life, straight line, and no residual value. So we're going to go to the the grinder. Okay. We're using straight line. We're going to be useful life is 5 years, no salvage value. Okay. So then let's go ahead and take a look in our general ledger to see how much that coffee brewer is and when do we place it into service. So here's the coffee grinder. So how much is my coffee grinder right now?
41, 45, 57.
41, 45, 57. Okay. Now here's the most important thing. When did I place into service?
June 25th?
June 25th is when I placed the discount, but I already put it in service way back then.
June 15th.
June 15th. Now, according to the rule, are we going to depreciate this month?
Nope.
No, yes, no?
Yes.
Yes, because what's the date for the cutoff line?
The 15th.
The
So the first to the
15th. Exactly. This made it before. This is at the half point of the month. So in this case, you are using it for technically more than half the month. So you are going to depreciate it for the month of June. Okay. So what's my depreciation basis going to be?
41, 45, 57.
41, 45, 57. What's my depreciation rate?
0.20.
20%. Okay. So therefore, what is going to be the depreciation for the month of June?
$69.09.
6909. Good. Okay, once again, you don't need to solve this part. I'm just doing it for practice purposes only, okay? Because you won't be needing this table next month, right? We're only solving for one month. So there we have it. The depreciation for the grinder is 6909. So let's see. Let's take a look. What is next? Okay. Now it says right here, you're going to calculate 1 month of depreciation, okay, for the computer, printer, and cash register. 5 years, double declining, no residual value. Okay. So 5 years, double declining, no residual value for the computer, printer, and cash register. So let's go ahead and go find those. Here's the computer. Should be the first table here. We know depreciation method is double declining. Right? And we know this useful life is 5 years. Right? It was at 5 years.
Yes.
Yes, 5 years. Okay? And no residual value, so no salvage value. Okay? So, once again, let's go ahead and locate where our computer, printer, and cash register is. Okay, so it should be a couple tables above. Here we are. Here's the computer. All right. When did we place it into service, and how much did we buy it for?
June 5th and 1834.84.
June 5th, 1834.84.
Yes.
Good. So now we have all the things that we need, right? Because obviously, the day that you buy it, you got to plug into the wall and set up the computer. So your assumption here is you're getting it ready for service. Okay? Month is for the month of June. Okay. So what's my depreciation basis going to be?
1834.84.
1834.84 because that is the beginning of its life's book value. Good. What's my rate going to be?
Point 4.
Yes, it's going to be twice as much. So it's going to be 0.4. So therefore, what's going to be my depreciation expense for the month?
$61.16.
$61.16. Okay. Okay. So if we were to solve for the month of July, what's my depreciation basis going to be?
The 1773.68.
Good. Good. Just testing if you guys remember. Okay, so good. So in this case, we're going to be using the beginning of the year's book value for all the depreciation basis. Okay. Good. So 6116 is what we solved for the computer. Okay. All right. Let's see. Let's solve for the printer. Right.
Wait. Can you go back? What was the last? 1773.68. Okay, thanks.
Okay. Printer. Right. We're going to be using double declining. Okay. The printer has 5 years. Salvage value 0. Okay. And let's go figure out what the asset cost is. Okay. So when and how much was the printer?
$378.87.
Okay. $378.87. And when did you buy it?
June 5th.
June 5th. Okay, so 37887. And we placed it into service on June 5th. Okay. So we're going to be depreciating it for the month of June. Okay. What's my depreciation basis going to be?
378.87.
378.87. What's my depreciation rate going to be?
$0.5.
Not 0.5.
1 times before. Oh, is it just 5? 5%?
Not 5%.
You have a 2 there. So is it 10? Did you double it?
Well, in this case, I have to double it because it's double declining.
Oh, okay. So
That's
you would divide by the 5, right?
Mm-hmm.
What'd you say, Nathan? I didn't hear.
it was me. Go ahead. I just I figured out 0.4. I don't know if it's correct.
Yes, that is correct.
Yeah,
Okay.
that's gonna
How
be
did you get that? Can you tell me how you got that?
It's 1
What's the
divided by 5, right? The
right?
formula is 1 divided by its estimated useful life, which is 5. And because it's double declining, we need to multiply it by 2.
Okay. All right.
So what's my depreciation expense for the month of June?
Is it 1263?
$12.63. Good.
So in all of these items for the depreciation expense, we're always going to divide by 12, right? Because we're only calculating for June.
Yes.
Okay.
Yes. Now, if you do depreciation at the end of the year, then you would just do the whole year. Or if it's in this case, you put into service in June, you only do half the year. But in this case, I'm not doing partial years. I'm doing a month-to-month basis.
Yeah, I'm just asking because I'm noticing a pattern here. That's okay.
Okay. So now we need to go into our cash register, okay? Once again, depreciation method is double declining. Estimated useful life is 5 years with no residual value, so that's 0. Okay. So let's go ahead and take a look in our ledger to figure out how much that cash register is worth. And when did we buy it? So when did we buy it and how much is it for?
June 6th for 649.49.
June 6th for 649.49. Okay. So date that we placed into service, June 6th, and it was for 649.49. Okay. So let's go ahead and solve for the depreciation expense for the month of June. Okay. So what's my depreciation basis going to be?
The 649.49.
649.49. Okay. What's my depreciation rate going to be?
0.4.
0.4, right? 1 divided by 5 times 2, right? Because 1/5 of a year gives you 20%, times 2 is going to give you 40%. Okay. And then what is going to be my depreciation expense for the month of June?
2165.
Good. Good. Is everyone okay here?
Yes.
Okay. So let's see what else is there. Okay. So then it tells you calculate 1 month depreciation for furniture. Okay. All furniture is going to be 7 years of life, straight line with no residual value. So furniture, right, as we know, consists of the tables and chairs, the counter, the desk, and the shelves. So in this case, that's what we're going to do. We're going to take the rest of the items, but this time it's going to be 7 years of life and no residual value. And it's straight line. So let's go ahead and see what the first one is. We have tables. Okay, the bistro tables is going to be our very first item here. Okay. What method are we using? Straight line. Okay. We know that it has an estimated useful life of 7 years, 0 residual value. Okay. So now we're going to go ahead and take a look at how much those bistro tables are actually worth. Okay. Here we are. Bistro tables and chairs. So, when did we buy it and how much is it?
Okay, we bought it June 8th, and the cost is 660508.
66508. Okay, so here we bought it June 8th. Okay. Our assumption is we peeled all the plastic off of it and we arranged it in the store. So that means it's placed ready for service. So in this case, and it was for 660508. Okay. So there we have it. We're going to solve for the month of June. Okay. So what's my depreciation basis going to be?
The 660508.
Good. Okay. What's my rate going to be?
Is it the 1 divided by 7?
Good. Correct.
So that would give me 7, right? Or
1
0.7?
0. No. What's 1 divided by 7?
Um, 1 goes into 7 times, right?
Say that again?
1 divided by 7 equals, is that right? 14?
Point 14.
0.14.
Good. 0.142857. Yeah, that's correct.
Yeah, 1.428. Okay.
So in this case, I want to solve for just that 1 month worth of depreciation expense. So what is my depreciation expense for the month of June?
$78.63.
78.63. Good. $78.63. Good. Okay, so the next piece of furniture we have here is the counter. Okay. So again, the counter was straight line, or is straight line. Estimated useful life is 7 years. Salvage value 0. Okay. And let's take a look at how much our counter is. Okay. So here, when did we buy our counters? And how much is the counters?
We bought it June 7th, and the cost was $1193.22.
Okay. Good. So let's go ahead and solve the depreciation for the month of June. Okay. So depreciation basis is going to be
1193.22.
1193.22. What's my depreciation expense going to be? I'm sorry, rate. What's my depreciation rate going to be?
It'll be the 0.142857.
Mm-hmm.
142. Okay.
So then what's going to be the depreciation expense for the month of June?
14.21.
$14.21 is correct. Okay. Okay. So now that we have that, let's see what is next. We have the desk set. So method we're going to use is straight line. Okay. Estimated use of life is 7 years with no residual value. Okay. So let's plug in those numbers that we get from our ledger. Okay. When did we buy the desk and how much was it?
June 7th for $658.37.
65837. 65837 for June 7. Huh? So then, right, 65837. Okay, so then let's solve for the depreciation for the month of June here. Okay. What's my depreciation basis once again?
The 658.37.
Yes, 65837. Okay. My depreciation rate.
0.142857.
Okay. And what's my depreciation for the month of June?
Do my calculation here, comma 2. $7.84.
$7.84 is correct. I think that was the desk set, right? All right, so last but not least, we have display shelves. This is once again straight line, 7 years useful life, 0 residual value. Oops, edit undo. 0 residual value. Okay. And this time, when did we buy the display shelves and how much was it worth? Or how much did it cost us?
Display,
Go ahead.
purchase. Go ahead, Nathan. I'm sorry.
No, you get. Go ahead.
Purchase June 7th for $577.08.
June 7 for 57708. 57708. Good. Right. Once again, we're going to be doing June. Okay. Depreciation basis.
The 577.08.
57708. What's the depreciation rate?
The 0.142857.
Mm-hmm. And then, last but not least, what is the depreciation expense for the month of June? Anybody, what's the depreciation expense?
6.87.
$6.87. Good, good. So we just did depreciation for all of our equipment, all of our office equipment, all of our furniture, and our truck. Okay. Now, since we are already on the depreciation table, I'm going to tell you this. I've also included goodwill since it acts just like depreciation, right? What method does goodwill use? Okay, goodwill is our intangible asset, right? Which it says right here, to amortize 1 month for goodwill. Okay, and of course, goodwill is stated to be 15 years. So in this case, right, it's very similar. So it's going to be the last table here. Okay, so the amortization method, which is amortization. Okay. Useful life 15 years, okay, which acts exactly. Okay, so when we're looking at amortization, which depreciation method are we going to be using? Which method is similar to amortization?
Straight line.
It is exactly with straight line, except you don't have a residual value. So in this case, we're going to figure out 1 month, which is just June. Okay. Now let's go ahead and figure out how much that amortization is for. Okay, so sorry, there you go. Amortization. Okay, so let's see what goodwill. When did we buy it? Because it starts right away. And how much was it worth? Or how much did it cost?
June 4th for 2100.
June 4th. Okay, so remember, intangible assets, they just act like trucks, right? They depreciate instantly. So the day that you buy it is the day that it starts to depreciate. In this case, to amortize. Okay? And it costs $2,100. Okay. So let's solve for the 1 month worth of amortization. So what's my depreciation basis?
$2,100.
2,100. What's my rate going to be? 1 divided by 15, which gives you
0.066666666.
That's correct. Okay. So what is going to be my amortization for the month of June?
$11.67.
$11.67. Good. Save your depreciation tables. Okay. Because now we're going to be copying all of that information into our journal. Okay. And wherever you want to start, you can start wherever. In this case, I'm going to go one at a time. So, one at a time, meaning I'm going to start from the left table, the last table here, which is the computer, or the first table, excuse me, which is the computer. And we're going to make it all the way down to amortization. Okay. So, first thing that we have is the computer. Now, how do we journalize our depreciation? How do we journalize depreciation?
Do we debit depreciation expense and credit accumulated depreciation?
Good. Now, let's take a look at the accumulated depreciation. Now, it's one for each and every single one. So we're going to be enjoying our time to go through each and every single one of the assets that we have here. Okay. So depreciation expense, what account number is that?
$66,000.
66,000. Okay. So we're going to go through each and every single item here. So in this case, I'm going to be totaling up my depreciation expense. Okay, so because obviously, since I'm going to be listing everything out, my total expense is going to be determined by the equal sum. Okay, so the first thing that we have is accumulated depreciation for the computer. Okay, so that's the first account that we have here. All right, so make sure you're looking at your chart of accounts. So accumulated depreciation for the counter. I'm sorry, for the computer. Computer.
Is it the 140010? The 14010?
That's the computer.
Oh, accumulated.
So right here, accumulated depreciation for the computer is 14,011. Okay. Okay, and it's going to be a credit because it's going to decrease the actual value of the asset itself. So once again, this is a contra account. So in this case, right, how much am I going to depreciate my computer for?
The 6116.
6116. Okay. So what about my printer? Right, you have to list them all out. ACUM, depreciation for the printer. Okay, which should be 14,021. Okay. So how much am I going to depreciate my printer?
$12.63.
$12.63. So the next thing on the list here is going to be my accumulated depreciation for the register, cash register, which is 14,051. Okay. How much am I going to depreciate my cash register? $21.65. Okay. Let's see what's next on the list. Next on the list is going to be our coffee brewers. So accumulated depreciation. for the brewers.
So we just have to add up all this, right?
Correct.
96.20.
$96.20. Okay. What's my account for the accumulated depreciation for the brewers?
One 15011.
Okay, good. So let's see what's next on my list, right? We added up our 2 coffee brewers. So let's see what's next on our list. We have our coffee grinder. So okay, which is 15021. Okay. How much are we going to depreciate my coffee grinder?
6909.
6909. Okay. See what's next on our list. We got the tables. Accumulated depreciation tables. Okay. I don't know if you can copy and paste it and be able to make changes. I don't think you can, but if you figured it out, so you just basically change the ending here. So for the tables, which is I want to say it's 12.
Uh, 13011.
Oh, 13011. Okay. And in this case, oh, that's right, my inventory is 12,000. All right, so in this case, how much depreciation am I going to do for the tables?
2863.
7863. Okay. I'm going to see if this works. I don't think it does, but why not? Let's try it. Okay. Oh, okay, it does work. Okay, so the next account we have is our counter. Okay, for 13,021. Okay, how much is the depreciation expense for the counter?
1421.
1421. Okay. So here we go. Depreciation, accumulated depreciation for the desk. Okay. Which should be oops. Okay, which should be 13,031. Okay. How much am I going to depreciate the desk for?
$784.
$7.84. Okay. So next we have the display shelves. Okay. for 13,041. Okay. How much am I going to depreciate my display shelves for? How much am I going to depreciate the shelves for?
$687.
$6.87. Okay. And then finally, last but not least, we're going to depreciate the truck. Okay. I don't know what account number that is.
That one is 17011.
Good. So how much are we going to depreciate the truck for?
$257.67.
$257.67. $257.67. Perfect. Okay. So, of course, at the end of the day, what's your grand total depreciation expense? All right, you're going to equal sum this. So, what's your grand total depreciation expense?
$625.95. Nope.
$625.95. Yes, that's correct. Good. Good. And you can make a note here to depreciate all fixed assets for the month of June. And that's it for the depreciation expense. Okay. Go ahead and journalize that amortization expense for the goodwill. Okay, since we're already here, it's in the same table. So here, again, we are going to treat it exactly the same as depreciation expense, except we're just going to change the word to amortization expense. Okay? And the same goes as far as accumulated amortization. Okay? And it's going to be for goodwill. Okay? So amortization is 66,500, and let's see, the accumulated amortization is 19,101. Okay. How much was the accumulated amortization expense? Or in this case, sorry, not the accumulated. The total amortization expense.
$1167.
1167. And once again, description is to say to amortize intangible assets for the month of June. Okay. So now that our journal is completely done, your table, your depreciation table is also done too. So you can close your depreciation table if you like, because you have everything you need on your journal. Okay? And of course, every time we do a journal entry, you must update your ledger. So, starting with the very, very, very first one we have here is going to be your depreciation expense account. Okay. Now, I encourage you, because there's so many accounts that you used, please stay in order. Even though it's not really technically in order, but that's okay, just as long as you stay in order so you don't skip over one and forget to put it in there. So depreciation expense, it is June 30th. This is fixed assets for month of June. Okay. General Journal number 23 now, because we started on a new page. Okay, so that means, right, my total amounted to be a total of $625.95. Okay, and that is going to be again your beginning balance right here for $625.95. Okay. Okay, $625.95. So now, making our way to our assets, we're going to go one at a time in each account. So the first one we have here is the computer. Okay, here. Accumulated depreciation for the computer. Okay. I'm going to put adjustment. Okay. As far as that, it's up to you if you want to put like more description. In this case, an adjustment entry is good enough because we're doing it for the every year or at the end of every month. So there's no point to have to put the month in there because it's going to happen at the end of every month. So I'm going to go ahead and move forward to General Journal 23. And we're going to credit the account for 6116. Okay? And that means all beginning credits are going to be 6116. So this is where every time we build our table, our accumulated depreciation is going to reflect this account balance. Okay, so the next year, that means it's going to increase by X amount. So that means your total accumulated depreciation is going to reflect here. Okay. So that was just the computer. Okay. Next is the printer. Okay. General Journal 23. For $12.63 for the accumulated depreciation for the printer. Okay. Next is the accumulated depreciation for the register. General Journal 23 for a total of $21.65. Okay. So then next on the list we have here is going to be our coffee brewer and coffee grinder, which is perfectly because it is continuing on down below. So here the accumulated depreciation for the brewer. Okay, this is where you can choose to distinguish that the coffee brewer number 1 was X amount while the other one was the other amount. So brewer number 1 was for how much? Let's see how much it was. Brewer number 1 was for $52.78, while the coffee, the brewer number 2 was $43.42, so 62, 52.78, 52.78. Brewer number 2, 43.42. Okay. So then again, depreciation expense was the general 23 for a total of, let's do 52.78 plus 43.42, which gives me a total of 96.20. Okay. Which once again is going to be the same as your account balance.
Can you give me 1 minute to catch up, please?
Yes.
Thank you.
Mm-hmm. Next is the coffee grinder. Adjustments on general journal number 23 for the total amount of $69. Oh, not debit. Make sure you're on your credit. $69.09. Next on our list is the furniture. So I'm going to go scroll all the way up until I find my bistro tables. There you go. Bistro tables and chairs. Accumulated table depreciation for tables. This is an adjustment entry for General Journal 23 for the grand total amount of $78.63. Okay. Then we have the counter. The counter was $14.21. Okay. The desk set was for $7.84. Okay. Last but not least, we have our, well, actually, not the last one, but the last of our furniture is our shelves. Okay, so display shelves, which we have it as an adjustment entry. General Journal 23, which we have it to be $6.87. Okay, last on our list is going to be the truck. Here we are, truck accumulated depreciation for the truck. An adjustment entry. If you want to, you could say 1,200 miles for the month of June. General Journal 23. And we depreciated it for $257.67. Since we're already here, let's see. Yeah, since we're already here, go ahead and do the accumulated amortization for goodwill. Okay. Which was a total of $11.67. Okay. And then we'll go ahead and update the last account, which is the amortization expense. And then we'll stop there for now, for the break. Okay. So this is the accumulated amortization for the goodwill. So therefore, before we do anything, don't forget to also put it into your amortization expense. So here is the 30th, You could say adjustment, and you can even write goodwill. Because maybe goodwill might not be the only intangible asset that we have here. So credit or debit is going to be for the 1167. Okay. Okay, so let's see. It is exactly 10:21. I'm going to round that to 10:22. So please take your 20-minute break and be back no later than 10:42. And we'll just try to wrap up everything as much as possible. So let's just finish the rest of the adjustment entries, and then we'll continue everything else tomorrow. Okay? So we're going to stop here.